There's a lot of things happening with Alibaba, and I think the biggest question, and I actually had a call with a client about it today, do you need to sell Alibaba before it splits into 6 pieces?
If you have it.
If you have it, if you own the stock.
And if you don't have it, should you buy it now?
Yeah, and of course we don't recommend that, but
No.
but we do want to give you some
Food for thought.
exactly some insights whether or not.
But they were in the news this week. Why?
Well, like I said, you're going to split the company into 6 different departments, the 6 different divisions.
Yeah.
Taobao, one is more into media. I think one is more logistics. So they're really going to split up the company to be, first of all, a little bit more less depending on Chinese regulation to satisfy the regulator. I think that was the main reason that I thought, if I read, and also U.S. Like the United States, and it's a little bit difficult. I don't explain the word that well. Scrutiny. So they will not consider it as being a too big company, like a too big threat. So when they split it up, that will make them a little bit more friendly towards the exterior. So yeah, and all in all, I think it's been accepted positively by the market. We can say that, right?
Yeah, and I think they also said in their own statements that because it's quite a big company, and if they split it up in 6 different companies, then they can be faster time to market. They can be less independent because they are smaller companies. They can do IPOs whenever they want. They can raise money in other ways. So they're much more independent and faster and more profitable. That's what they think. We spoke about Alibaba a couple of times now in the last years.
We did. We did it in different contexts. We did it about when Ant Group was going public. Yeah. We talked about it when the Chinese ADR, so the American Depository Receipts, were possibly going to be delisted from American stock markets. I think we talked about also when Jack Ma all of a sudden disappeared from China mainland. So we talked about it a couple of times. If you look at the listings, I think we still dare to say that it's. I mean, you have of course the currency risk, but that you best buy it on Hong Kong, right? Then you have the direct listing. And the funny thing, if you want to look it up and you look in your trading platform, you just type in 9988 and you will get the Hong Kong listing. So 9988. That's the official listing of Alibaba.
On the other hand, the problem with the US is less because they agreed on accountancy rules. No?
Exactly. That's a good thing, and also I think it will be much more supervisable when they are split up in different segments, rather than having to look at a massive group, which is tremendously big. Now they can look at smaller pieces of the company. What do you think about it as having 6 different segments? Do you think it's a good thing that they do it, or?
With the arguments that they use that they are more independent, yes. I think that I believe in that. On the contrary, you see a lot of companies, they do takeovers or they're going to work together because then there are synergy effects. So then when they're now splitting up and they don't talk about negative synergy effects. So
that's actually a good one. Because you see many times companies combining forces.
Yeah.
And here you see the opposite. I mean, it is of course a different business mentality than what we are used to in the West, I think, isn't it? That might be something to do with it.
And what you also see, I think, within those 6 pillars, you see quite some differences in revenues and turnovers.
Yes. I think we both prepared it on our own behalf, but you have that information, right?
Martin, please.
No. What was what you picked out? The revenues in general coming from the e-commerce, right? That's still the biggest driver. Is that the same information you found?
Yeah, but the grower is?
That is the, I wrote it down, it is the logistics.
Yes.
Kai Niao. Yeah. But I think what I was thinking about when I wrote it down was, isn't that not because of the fact that it grew more now because they have been completely standstill in China? So then, of course, that nothing was going on. So maybe now all of a sudden they opened up. So the logistic is, of course.
Yeah, but in 2022, Alibaba grew revenue-wise with 2%. If you compare it to the other peers in the US, I think Facebook Meta grew 1%, and Amazon grew 9%. So it's not too bad. So, but underlying, you see that the company, the part that's in the logistics, they grew 27%. So they're a really big contributor, and they're the 3rd large contributor revenue-wise. and they have a mission. They connect the dots between all other logistics problems. So they now within China they can deliver everything within 1 day, and outside of China within 3 days. And China is quite big, eh?
It's bigger than the Netherlands.
But okay, but what did you see from the different pillars and
there was one sector, but I didn't write it down, and now you're gonna say why not, Martin? But there was one they were actually losing revenue. Wasn't it the cloud business, or was it I looked at the Reuters for the source information.
I didn't see that. No, I didn't see that what was going down. No,
there was one of the revenue pillars that was losing actually. But I mean, if you then you can take over if you want. If you want to do first the revenue part, or
no,
shall
please.
I tell you a little bit about the share price? I mean, if we look at the share price, the all-time high, we were at 300 Hong Kong dollar, which was in October of 2020.
$300.
300 Hong Kong dollars, and then the lowest point was actually in June last year. It was about 65. So it came down tremendously, and you had to laugh because I just spoke with somebody, and yeah, he still was in a loss after holding the stocks for a very, very, very long time, and he said, yeah, well, I'm actually done with this stock now, because and it's a lot of clients. Everybody wanted to have, and it's the same thing what happened to Baidu, Tencent. A lot of these stocks are still underwater if you compare them from what they were.
But it's also with the US ones.
Yeah,
Amazon and
definitely.
Google.
Yeah. Of course, the same. Exactly. Yeah, you're right. Yeah. So yeah, I mean, now at this moment the stock is about 110. There's a very heavy resistance level at 120.
Yeah, and also the moving average, the 200, I think, is really it's around this
level.
So it's a really important level.
It's really important. Tell us a little bit more about underneath the.
I found also some interesting things. They started it 23 years ago, and the name was invented by when he was sitting in a coffee shop and he was thinking about Alibaba and said, "Oh, that's a really good name." So Jack Ma, Jack Ma, he invented the name just like a little bit like the Apple story. They were on the Apple field. They had an Apple, now we call it Apple. So not a lot behind it. They started it with $80,000 for some furniture, and they started from scratch. And they had a peak on the peak moments. In general, they generate 583,000 orders per second. Wow. 583,000 orders per second. So big.
Imagine the strength of their platform. Eh?
Yeah.
If you're capable of doing that's times a minute.
It's insane.
It's 3 million a minute.
Yeah.
And that all needs to be shipped and packed and sent.
They create around direct and indirect 70 million jobs. 70 million jobs. So big is the company. Yeah. And again, to repeat, 2022 was not a good year, but the EBITDA increased by 16%. So they during the lockdowns in China, they were focusing on the financials to cut costs, and also they have a really solid cash flow because they invest in a lot of companies. They have a lot of companies. And they also bought back in the last quarter of 2022 for $3.3 billion of shares. So you see, they're quite a solid, from a finance perspective, company. Now we spoke about the logistic part, and I think that they want to grow that on a world scale. So that, I think, could be one of the reasons that they sell it, because then they can grow faster. And if you look at the forward PE, it's around 12. The industry is 18 point something. The S&P is around 17 now. So I think it's an interesting company, but it always has a discount from a Western perspective, because especially what's happening with China, the position from China in the war, foreign investors are not that happy to invest in those companies. So don't think that the forward PE will be bigger and go to the S&P, because I think it's always a discount on it. So I think that to split it up is a really good thing.
For this, yes. What will the effect on the shares, and where you should put your money and where not? I think it's still very early to say, no, and it's difficult.
Yeah, but I think it's I think for the shareholders, so the investors that hold the positions, this is this is interesting to see for yourself.
Did you pick up when it is going to happen?
No.
No, I was looking for it, but I couldn't find it.
No.
No, I think it's just an announcement still.
Yeah.
Okay.
Oh yeah, the share price went up with double digits, I think, in 2 days. So the market likes it. That's always if we like it or you like it, it's not that important. The important is if the market likes it. So if you don't have it, please have a look at it. Do your homework. If you have it, I think maybe better times are coming up.
Could be easily, yeah. Yeah, absolutely. And follow it closely, because until you know the dates, etc. Thank you for watching, and we see you again next week.
Thank you.